Hello traders and welcome to another video review. Today is Tuesday, July 14th, 2026. Let's take a look at the economic calendar for today. As you can see, we got only one high important data release for Tuesday. At 2:30, we got core CPI and CPI data scheduled for release from the USA. The core CPI is expected to stay at the same level of 0.2%. While the monthly CPI is expected to drop from 0.5 to minus 0.1, and the quarterly CPI is expected to drop from 4.2 to 3.8%. So that's about very important data release for today. So without any further ado, let's switch to the charts and we start with euro dollar. Let me switch to the 4-hour time frame chart of the euro dollar. There you go. So 4-hour time frame chart of the euro dollar is still showing us consolidation or a sideways trend. This trend has been established after the lows at the level of 1.1326 was done on June 24th, and since then we got the local high 1.1473, and this is the range of the consolidation or sideways trend. We are oscillating around the level of 60 down to the 40, up to the 60, and so on. So we cannot right now say anything about the current direction. It is sideways. Nevertheless, in the background we have a strong down trend. So we are waiting for the breakout on the euro dollar. British pound, after the movement towards 1.3450, the technical resistance pulled back a little bit with actual low located at 1.3340. So any breakout below this local low at 1.3321, so it's less than 20 pips away, means that the local high is here, and we should expect this market to move lower yet again. Next technical support 1.3302 and 1.3273. US dollar versus the Japanese yen doesn't actually do much because it stays at the same, virtually at the same level, oscillating up and down around 162 right now, around this level. Swing high and local high 162.86, local low, this big pin back to the downside with the extreme low at 160.51 into the extremely oversold market conditions. Otherwise, the volatility is low. As you can see here, for the whole Asian session, volatility was low, and right now the market keeps moving in a very, very limited range. The gold market, as you can see, moved lower again. A local low is right now below the $3,000. Sorry, $4,000. It's $3,983. So these days, after this 6.5% rally, the market continue the downside movement. Maybe our situation here is a little bit more complex than we assumed, and this level here might not be the low for the wave. Why might this still might be some sort of the second connector like it is right here? However, obviously this one is way bigger in price and time. Nevertheless, there is still a chance that the bottom for the wave Y has not been found just yet, and the market keeps moving up and down in order to basically develop the wave Y to the downside just yet. We need a breakout above this local swing high 4,202 to confirm, to have a first confirmation that the bottom for the wave Y is in place. The S&P 500 volatility is limited as well. We hit the level of 7,578 and got rejected, bearish engulfing pattern, 3 ways to the downside towards the level of 7,485. It used to be resistance, now it is a support. So this zone, as you know, is changing the sides very quickly, and it's been like already, I don't know, 8 times that this used to be demand, and of course supply, then demand again, then supply, and so on and so on. So the market is oscillating around this level. It likes the number of 7,500 very much. Momentum is slightly negative, 48 points right now, but it doesn't mean too much because our volatility here is still limited. So as you can see, you can observe the limited volatility on almost every market, including even gold. The last one we are going to talk about is crude oil. Obviously, the geopolitical situation is in favor of this kind of a movement to the upside. So the situation here looks like we want to fill this gap between 84 and 82.23 because the recent situation in Iran and with the USA. For now, we've done something like 20% from the lows of 67.14, and the momentum is already extremely extremely overbought levels. So we might see some kind of a spike to the upside, and then when the gap is filled, we might see another movement lower. So for now, the situation is quite clear, and the crude oil remains very susceptible for any changes in geopolitical situation. The Bitcoin doesn't do much. The Bitcoin is locked inside of this very tight range, and it doesn't do much. On the one hand, you have the 64,590 technical resistance, tested a couple of times, then rejected. On the other hand, you can see the level of 60,942, which should provide the technical support. As long as we trade above this level here, this technical support, the outlook remains slightly bullish, but we need a breakout higher in order to confirm it. In the background, obviously, we have very strong downtrend, very strong supply zone. So this looks like a temporary pause in a downside movement of the Bitcoin. It doesn't actually look like something that might be the beginning of some kind of a reversal, maybe better, bigger, stronger, deeper correction to the upside. It doesn't actually look like this just yet, of course, from the technical point of view. On the other hand, the market doesn't help the situation here on the Bitcoin, and the current situation here is rather sideways, maybe even bearish, because it's quite easier for the market to continue the current trend than to reverse and start a new one. So for now, we are waiting for the breakout either to the upside or to the downside, but please keep in mind that in the background we still have the bearish pressure and downtrend. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.